Hello, my fellow Extraordinary Americans. I'm Cosmos Dar, and this is Extraordinary America. What is Extraordinary America about? You see, American identity is about freedom, the opportunity for a better life, and the pursuit of happiness. However, most Americans are not free when it comes to the financial front. Most Americans are suffering from financial slavery due to loss of jobs, stagnant wages, inflation, and debt of all kinds. Wealth and income inequality runs rampant across America, and the middle class is all but disappeared. So what is Extraordinary America about? Extraordinary America is about the abolition of financial slavery. It is about the financial freedom of the 99%. It is about the nation of immigrants and descendants of immigrants awakening and unleashing the extraordinary within themselves and setting themselves free. The path to financial freedom is through entrepreneurship and investing on the light side. It is about financial education, not only when it comes to money in the monetary systems, but also in regards to how to start a business, investing, especially when it comes to precious metals and real estate. In this podcast, I interview guests, many of whom came from humble beginnings, to see how they did it and how they attained financial freedom in their own lives and how they did business. And it is my hope that you will be inspired and you will want to awaken extraordinary within yourselves and realize the American dream. Once again, welcome to Extraordinary America. Welcome back to the show, my fellow Extraordinary Americans. For today's guest, we have Dan Calandro. As an entrepreneur and CFO, Dan has a long track record of operational success and improving performance through sound management and smart investment, including transforming a failing CPG company into the undisputed leader of its niche, increasing sales by 700%, margins by 60%, and shareholder value by 525%. As a private equity investor, Dan has invested more than $1 million developing his proprietary 1551 method, which combines science and common sense to deliver a winning system that eliminates the need for corrupt Wall Street operators. As a consultant to Fortune 500 executives, Dan participated in high-level investment meetings with the well-known Wall Street firms, including Goldman Sachs, Merrill Lynch, Morgan Stanley, and Smith Barney, to name a few, to what he discovered was both shocking and disturbing. Since 1995, Dan's portfolio has grown by an incredible 3,600%, thriving through 4 major booms and busts and delivering an impressive average annual gain of 135% with less risk. His groundbreaking book, Lose Your Broker, Not Your Money: Unmasking Wall Street's Secrets, untangles the mystery of successful investing by providing a market-based solution that is easy to understand, simple to use, and produces superior performance to any method currently found in the market. Dan is an extraordinary American, and I'm glad and honored to have him on the show. Dan, are you there?
Yeah, I'm here. Good to see you, Cosmos.
Dan, thank you so much for taking the time to do this podcast with me. I'm truly honored to have you on the show. So, Dan, can you tell me and the audience a little bit more about yourself, your background, and how you got started?
Sure, thanks. Well, I'm a finance person. I grew up poor in the inner cities, Cosmo, and you learn the value of a dollar down there, right? And my hope and dream always was getting out of there. And I really ran away from the city to college, right? And I didn't know what I wanted to do. Math came easy to me, so I wanted to make a lot of money. So I got into business finance. I always wanted to be a CFO, and lucky to have done that a few times over in my career. But as a hobby, really, and it really started in college because Black Monday, October 19th, 1987, still to this day, the single biggest drop in Dow Jones Industrial Average history happened. And it kind of grabbed my attention. And I've been doing stock market research and analysis really since then. And, about 15 years ago, 20 years ago, I picked up a wealthy client, and they owned an investment company. And he said, "Do you have any advice?" And I said, "Yeah, you own too much, right? And you got to get smaller and tighter and more potent." And my method, my philosophy, which came from a graduate school project, kind of became a vocation for my life. And it's encapsulated in my book, Lose Your Broker, Not Your Money, My Method 1551. So now, I'm just trying to help people understand and make more from their investment dollars, because really, if you look around what's going on, the government's really doing everything they can to bankrupt the middle class. And my vocation, my goal, my mission in life is really to take my God-given talents of math and science and financial expertise and kind of help the middle class overcome the challenges that they have right now.
Dan, that is amazing what you're doing, because even like Extraordinary America is about people on like helping people understand how finances and banking system and how monetary systems and how business work, and like even the mindset of getting there. Because a lot of what people need to realize is that money works in a certain way. And we know a lot of the rules, but we don't know all the rules of the game. And when the
Right.
bankers and the people in power, they know all the rules. And if we don't know of them, we cannot play it. And a part of that is when it is like the inflation that's happening right now. But before I get there, Dan, I want to ask, like, what was your strategic goal regarding like your vision and career and vision, like regarding your career when it came to business and finance? Like, what got you to the point where you became like an analyst and all of that stuff?
Well, I've always been creative, Cosmo, right? I'm a writer. I'd like to write novels and screenplays if I could, right? But I've always been creative. And so I took that in business, looking at standard financial statements, saying, like, how can I give, say, marketing and sales a different look at the business? How can I give them some information that isn't just standard off, the page? And how can I help them do their job better ROIs, basically? And I started doing all different kinds of analysis for upper level managers in sales, marketing, whatever, my bosses. And there I have it, right? Oh, take a different. They like different, right? And that's what I did with the stock market. I was always been interested since college. And what if what they're saying isn't correct, right? That's science, questioning the standard, right? What if? So think about this for a second, Cosmo. 115 million Americans own mutual funds. And those 115 million Americans own on average 4 mutual funds. Well, why would they do that if investing was simple and easy to do, like I say it is, right? I could teach anybody how to invest successfully. I say that. Not just in that book, but me and you speaking for a couple of hours off camera. I could teach you my method in 2-3 hours off camera, right? Why would they do that? Well, Wall Street makes it really complicated, so you can't do it. So you have to give them your money, right? And the average mutual fund has 1,000, 1,500 stocks in it. And they're all trying to outperform this market, this quote unquote market. What is this thing? The Dow Jones Industrial Average, most people. The Dow Jones Industrial Average is 30 stocks. How are you going to beat 30 stocks with a portfolio of 4 mutual funds that own 1,000, 1,500 stocks each? It's impossible, right? Again, they sell mutual funds because they make a lot of money off, right? They make investing complicated because they could sell you 5,000 stocks if it is. If it's simple like me, my 1551 method, is all centers around 15 stocks, right? Everybody knows 15 stocks, right? Wall Street can't get rich if they tell you to buy 15 stocks, right? But I tell you, it's not about Wall Street, it's about you, right? So the only way you can outperform is to build yourself a portfolio that can outperform. Because like you said, inflation now, 8%, 6%, 10%, whatever you want. The government doesn't include food and energy in that. And that just shows you how corrupt they are, because we all need both, right? We all need to drive to the market to buy food, right? And if inflation continues, and it will because of what they're doing and how they're doing it, right? You need more in retirement. Social Security can't keep up, right? It'll be broke in 2034. Then what, right? Then they reset, right? They revalue everything, right? You need to put as much money as you can away for the future and make as much off that money, because there's only 2 ways to make money, right? You go to work every day and exchange your labor for money. That's one way to make money, right? And then save money and put that money to work. So that money's working while you're working to earn more money, right? There's only 2 ways, right? You go labor or have your money work for you. You got to do both, right? And you need to make as much money as you can so you can stay ahead of inflation and the cost of healthcare and everything else that goes along with retirement.
Dan, this is such an important topic. Like, I cannot stress to the audience more how important it is to beat inflation. So, like, a lot of like the people in the middle class, which is now disappearing at a rapid rate, right? And like most Americans, like their natural tendencies to put all the savings into a savings account and then just like they're basically they believe in social security and all of that, and their plans for retirement is to basically work till 65, and then basically after that retire and like work on their savings. But you and I both know that that's in today's world, with the rate at which inflation is going, that the purchasing power is being destroyed. So in your opinion, what should most Americans do to basically combat inflation so that they can retire eventually properly?
Yeah, and me, in my book, in the later chapters 6 and 7, it's only 8 chapters. It's very easy to read, very easy to understand, and it works, right? You got to have cash. I truly believe, and people should understand that cash is a non-earning asset in the best days. In the worst days, inflationary times, right? If you get 1% interest on your money in a savings account, and nobody gets that anymore, right? But if you did, and inflation's at 5%, let's say, you lose 4% purchasing power year over year, right? But you need money, you need cash just in case of an emergency. Your car breaks down, right? And strategically long term, right? You need cash because you can't buy low without it, right? All investment, there's only one way to make money with investment. It's buy low and sell high. That's it. That's how you make money. You wake up in the morning, God gives you time. It's free, right? You got a cost of living, though. You got rent and lights and everything else, right? So there's a cost of living, right? Call it whatever you want, right? You need to go and make more money than that cost to actually earn money to save and invest, right? Mm-hmm. Right? So you have to have cash. So if that's the first thing that you have in your portfolio, and I preach a multiple asset class portfolio, cash would be one of them, right? A hedge to your cash. What's your hedge to your cash? You and I spoke a little bit off camera. Metals, gold. I believe in that, right? And gold's dynamic to cash has changed a little bit since it's gotten securitized back in '04 or whatever. But still, gold is a hedge to your cash balance, no doubt, right? So they should go in inverse relationships, and that's what you want from a hedge. And everybody, third component should be some high growth component, whatever that is. For some people, it's real estate. For me, it's stocks, right? It's equities, right? So that's where you want your growth. And you know that growth needs to cover your inflation short term and cover your inflation long term, right? So it's got to be a potent component to your portfolio. Gold should hedge both of them, right? Because gold doesn't always go up with stocks and shouldn't. It should go to the inverse of stocks to some extent and to the inverse of cash to some extent. So that's what a portfolio should do, right? One should go up when the other goes down. And your big growth component, that's where it's at. And for me, it's stocks. And using my method, and again, 115 million Americans own on average 4 mutual funds. My portfolio outperforms them all. And it does so with less risk and less volatility. And more, because it's stronger, it's built stronger. It's built with my method, my system, 1551, again, which is easy to understand, right? Mm-hmm. And for people, my portfolio started 27 years ago with $5,000, and now it's over 300,000, right? And so I still have 10, 15, 20 years before I retire, right? That's 600,000 or 700,000. It's fine. You started with $5,000. That's all it was. I didn't add to it. It doesn't include dividends in it, right? I show people how I built that portfolio on my book, and it's easy to beat that portfolio. I beat that portfolio. I could beat that portfolio with the same 15 stocks or trade them out. If I want. I'm the engineer, I built it. And I preach to people, if you build your own portfolio, you can generate any return you want with less risk using my method. And that's what it needs to be done, right? You need to be able to diverse yourself, but you need to have a speedboat when you're heading for an iceberg. You don't want the Titanic. And the average American is built like the Titanic. It has 4 giant mutual funds. And it's heading right now towards an iceberg. This whole economy, the currency market, is heading towards an iceberg. I'm comfortable because I'm in a speedboat. Most people are scared because they don't know what they have, but they're in the Titanic. And that's the scary part.
I think that like most people understand that there's a storm coming in the future, but they don't really know how bad it is. Like, because Because what happened in 2007, 2008, like the way the way the central bank dealt with it, or the Federal Reserve and the government, was that they use quantitative easing, and they just put the interest rates to zero. They just printed a lot of money, and then what it did is it basically just set it off for a future date. So like it just gets worse and worse. So when this bubble like finally pops, they can't just keep printing money forever, like at some point it's gonna pop, and then what are people gonna do then? And this
Right.
is what,
That's why you need cash, right? You need to buy low. It's all about buying low. And it's, again, Cosmos, right? They're manufacturing a crisis, like they manufactured the COVID crisis, like they manufactured the '08 crisis. They do that. That's what the establishment does. And they're doing it now, and they've been doing it for the last 10 or 15 years. And think about this for a second, right? And this is what most people don't get. Inflation's a monetary condition, right? Now, we've been printing money for a long time that didn't create inflation for a long time. There's a reason for that, because that money, through quantitative easing that you brought up, stayed mostly at the institutional level, okay? It stayed with Wall Street. It stayed with Goldman Sachs and JP Morgan Chase. It stayed there, and then they funneled it out, right? Through hedge funds and everything else like that. That's how they do it, right? COVID-19 was different, okay? COVID-19, they injected $6 trillion of new currency into a $20 trillion economy in 10 months. And they sent that money to everybody and their sister. People, businesses, big, small, medium-sized, right? Everywhere. They gave it to everybody, including foreign countries, but whatever, right? They did that all in 10 months. There had no choice but to create big-time inflation, even though the people who printed the money, the Federal Reserve, said it was transitory and short term and it wouldn't be around for long, right?
they lied.
Though, of course, they lied, because that's what they do, right? This is the same Federal Reserve that in '08 ran out of money. I mean, I don't know about you, Cosmos, but I'm telling you what, if I owned a printing press for American dollars, I'd never run out. They ran out, the Federal Reserve. That just tells you how little you can trust them, right? So that same Federal Reserve, different guy, that doesn't matter, same structure, same organization, same agenda, right, to print and finance big governments, encroachment on the free market. That's what's going on, right? So they did that, $6 trillion in 10 months. It had to create long-term inflation because they added too much currency. So you said, at some point the bubble's got to burst. I agree with you. All bubbles do, right? It's just a fact of life, right? And the reason is because they need to take a lot of that currency out. They put it in, and they put it in through Wall Street, the money center banks, and they take it out through them. Well, this giant stock market run-up that you've seen is from that money, that QE money. Because remember, 50% of that money, for every dollar that they inject, right, 50 cents of that dollar had to go to buying federal government debt, because that's how they finance the debt. The other 50 cents, Wall Street could do whatever they want with it, right? What do? They buy stocks. They're the market makers. They make the market. They buy stocks. They funnel the rest through hedge funds. That's what they invest through hedge funds. That's what they do. They're investment banks, right? So they got to take some of that money out. Where are they going to take that money out? Your retirement account. Your retirement account. Again, the Dow Jones Industrial Average is 30 stocks. The S&P 500 is 504 stocks, okay? The top 25 stocks in the S&P 500 are half the portfolio, half the worth of the whole portfolio. So for the Wall Street establishment, Goldman Sachs, JP Morgan Chase, right? All these big boys, Merrill Lynch, Citigroup, Bank of America, all those people, right? Those companies. To manufacture a huge stock market sell-off, you got to just sell 10, 15 stocks in abundance. And boom, down goes the indexes. And then program trading hits, right? program trading. What are they? They're the ones that control your mutual funds. They start selling, and boom, there's a crisis, right? There's a crisis. People start to panic sell. The individual, these people, your customer, my customer, the people that follow you, the people that follow me, get scared. They're retired or they're going to retire. They don't want to lose it all. So they sell low, right? They sell low. That's not the way it works. You got to sell high. It's high now, 39,000, my goodness, right? And they're baiting people into putting more money in because I don't want to miss it, right?
Yeah.
They manufacture the crisis. People sell low. Wall Street, the market maker, buys low when no one else will buy low. They do. And when is the perfect time to buy, Cosmos? I'll tell everybody, your audience and mine, right? When the perfect time to buy is when Wall Street runs out of money, when it gets really bad, right? Because they make the market. Because at that point, to save the system, the Federal Reserve will start printing money and giving it to them again.
They always bail out. And they're just rewarding bad behavior, and it just cannot last forever. And this is like the reason, like what you're saying is so relevant, is because I think that within this decade itself, there'll be a massive crisis where it's gonna pop, and then
I'd be shocked if it wasn't by the end of this year that we're going to get a big reset. I'd be shocked. I mean, it's ripe for it. The world is at war. Trump, Biden. There's no way Biden's going to be on the ticket. Who is it? I don't know, right? They're going to go to convention. They're going to remove him, put somebody else in there. That'll be a surprise, right? If they put Trump in jail, I mean, think about that. Biden's leaving. War everywhere, Middle East, Europe, right? We just had this AT&T, just lost coverage, last week. What does that mean? Is that the beginning of something? Who knows, right? But it's going to be ugly. Inflation's up. We're going to be going into a recession. It's perfect. Presidential elections, the big ones generally happen during presidential election years, right? Because they need that. They need that smokescreen, right? And again, it's about buying low. You need to have some power, but before that, you need to know what the heck you're going to do, right? So I'm out there talking to people like you, letting people know you don't know what to do. If you want to learn what to do, join in. Come on, building a platform to help independent investors navigate this crazy world, and it's a crazy world. I mean. Again, they need to take some currency out of this market to stop inflation. They can't take it all out of your wallet. They need to take some out of your retirement account because you don't need that money right now. They'll figure out that later. You'll figure out that later.
So Dan, a question regarding this. So like a lot of people are saying that a massive recession is around the corner because this state of affairs cannot exist forever, right? So from your perspective, how is it going to play out? Because different people have different opinions, right? There's experts on all sides saying, there'll be an equilibrium. There are other people saying that the banks will just print more money and then just make an even bigger bubble. And then some are saying that this is the way they can create a central digital currency. So in your opinion, how do you think it's going to play out once massive recession hits?
Yeah, I think all of the above. I think they will print more money because that's what they always do. They're going to say, well, think about how long we printed money without it causing inflation. Think about how long we could do that again, right? We just can't give it to the people, right? And if we do give money to the people, we have to give them such a small amount that it doesn't create more inflation. That's how because that's their toolbox, right? That's their bag of tricks, printing money. And they'll have to do that because they'll have to bail out Wall Street, right? Yeah. So they're going to try to, again, like they did during, the aftermath of the '08 crisis. They're going to try to keep it at the institutional level, the money, to not create broader market inflation. They're going to try to do that. But I do think that they want a digital currency, just like every other government. Europe's doing it, China's doing it, Russia's doing it. They do want a central bank digital currency so they can control your spending, right? And that's the death of freedom, All right, we're losing freedom, and I tell my kids this all the time. I'm sorry, we're losing the war that we thought we had won a couple hundred years ago. But like Reagan says, freedom is never more than a generation away from distinction and extinction. And we're there. We're knocking at the door of that. The communists are inside the wire. They're taking control of all industry, and they do it the same way every time throughout history. I mean, read the Communist Manifesto. I mean, the 5 pillars of communism, the 10 pillars of communism, education, housing, healthcare, the one by energy, they're doing it one by one. And in America, they got to be clever, right? So they took over the banking system in '08, and it looks like we're still a free private market because there's Goldman Sachs and there's JP Morgan, but all the money goes through the Fed, and they can only do with it what the Fed tells them to do. I mean, if that's not the nationalization of banking, I don't know what it is. They're doing with healthcare too. We all had to get the vaccine. We all had to wear masks, or otherwise we couldn't get service, right? What is that? Again, you read the Affordable Care Act, and you knew what they were going to do. You knew it was going to shake down. So with currency, they need to reset, right? We have $34 trillion in debt. We have this high inflationary.
How are we going to pay that off? That's not even possible. Like
it's especially when they doing nothing to solve it, right? Cosmos, how do you fix it, right? Again, inflation is a monetary condition, and there's only one thing that causes it. It's an excess growth in a monetary supply versus growth in it. GDP activity, the economy, right? Market activity, right? You can't have an economy that's growing at 2% and increasing the money supply by 10 and not cause inflation. You just can't, right? It's a monetary condition. They're going to have to reset it, which is the reason why they want to come up with a new currency, this digital currency. It's going to make this, it's going to make that, right? And they'll suck the physical currency out of the inner cities. Hey, trade in your dollars, your hard dollars, for this credit card that has all this, digital currency on it. And it's great right now. Social Security was great in the beginning, right? To make it worse, that's what government does. They make it worse over time, the more control they have, so they can control you. Give up your 401ks, give up your stocks. You don't need them. The government will pay you, right? We'll take control of it. We'll just tax you more, right? So instead of you putting money into your 401k, you put more into the Social Security fund, and they'll come up with a new name for it and revalue that as well. But the bottom line is stocks are never going away. They'll always be there, right? Equities will always be there. And that's how they fund government, right? The donor class funds government. And I say to people, take control. Start to learn how the game is played, because it's their world, Cosmo. It's their world. We just live in it. Right? You got to play their game. You got to buy low. You can't sell high. You can't buy high. You can't do that. They're goading everybody into buying right now. It's great. Biden's going to win, blah, 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 whatever, right? You gotta see it for what it is, and you got to get out of politics. Forget about Democrat and Republican. They're both bad, right? They're both the poison of us, right? We the people, right? You got to understand what they're saying and what they're doing so you can play that game. Because that's the only way you can stay ahead of the game, inflation, the moves, everything else to go along with it.
Dan, one of the things that the reason I started Exploring America was because American identity was about freedom. But when it comes to the financial world, most Americans are facing enslavement right now, like we've never seen, especially with this digital currency that you're talking about. Like when they took us off the gold standard, like Nixon took us off the gold standard, like we had some sort of sound money, but with fiat money, it just gradually took away purchasing power, which takes away your freedom. Because in order to now pay for a family, you have to have 2 people working instead of 1, and you are going into debt just to maintain the lifestyle. So when it comes to a financial front, we're not living this ideal of freedom. And that's why, like, the way we're losing the freedoms in America is through this financial system. And we need to get more people to be aware of it, because if we don't know how money works, we're just going to be enslaved, and we're not going to live out the American ideals.
Without a doubt, Cosmos. The first investment is in you, right? You got to learn, right? You got to, and in America today, everybody wants, press a button and it be done. Give me a pill and I'll lose my weight. And, It's that quick fix to everything. And it's not the answer, right? Hey, I say it in my book, a mutual fund is Wall Street's answer to the community, the complicated, process of investment that they created, the monster that they created. Wall Street makes it so you can't understand this. They tell you, Edward Jones had an ad campaign that says, investing on your own isn't so smart either a few years ago. You can't do this. You need a team of people. You need the best, the brightest, the best education. That's all bullshit. It's all a lie. So you give them your money and they do with it what they want, right? It's like you have to learn, right? And it's very basic. Listen, the investment is so basic. It doesn't get more complicated than this. The best businesses offer the best products and services to market at the best value, right? And because of that, customers in mass demand them, right? Buy them, right? And they turn out to be the best investments. Every single year, day in and day out, the best companies deliver the best goods and services to markets every year consistently. Those are the stocks you want. Where do you get them? Go look in your garage, your cabinets, your kitchen cabinets. That's how I find my stocks. I show people how I do it in my book and I'm in my course because it's not that hard. It's not that hard.
Dad,
right?
what one thing that came to my mind, right? So this is connected to Wall Street, and basically, in 2011, there were like a bunch of people that were like Occupy Wall Street, and they thought that they're going to do something by basically sitting over there. But the reality is, the real way you fight Wall Street is by doing what you're doing, by understanding how the game is played, and by investing, right? And I just brought me back to that level, and like it made me realize that people have so many different ways of thinking of Wall Street. Like it's like a myth, like a legend. Like they almost look at Wall Street people as gods. So from your perspective, like what is in throughout your entire years that you've been doing investing, like what is your perception of Wall Street? What do you think is the reality behind this? Like what's the myth? What is the reality behind the myth?
Well, they complicate the world of investment so they can confuse the hell out of people. And that's what they do, And on my book cover, it has me standing on my book cover on a corner of Wall Street and Broad, the center of their action, with a couple of brokers. That's what they are. They call themselves financial advisors these days, with clown noses on their face, right? And on my sleeve, it says in white, "Why would you trust these clowns again?" Right? Because they do the same things and they always play dumb. They're the experts. They're white collar salespeople that are trained to the nth degree. So they got big words that you can't understand. And if you can't understand these words, you're too dumb to do it. So give me your money, right? That's who they are. That's what they are. And I'm not that guy. I say, hey, I'm just like you are, and look how easy this is, right? Look how simple it is. And then, well, are you a financial advisor? No, I'm not. And why? Because I'm not a crook. That's somehow bad. And they say, oh, you think they're all crooks? No, I don't think they're all crooks. I also don't think they're all liars. I just think they don't know any better, right? I studied for that exam a couple of times, the Series 65 to take, because people always ask me that following, can't I just give you my money and you do it? And I said, no, I don't do that. I don't want to get licensed. Why don't you want to get licensed, Dan? Right? You could make a ton of money. Who cares? Right? I don't want to lie. What do you mean? Well, I don't want to lie. I mean, first of all, the Series 65 is not a finance exam. I got my master's and I earned a PhD. I just don't have it because I'm not paying an institution to give it to me. It's a law exam. That's what it is. It's a legal exam because they want you to know what you can say, what you can't say, what you can do, what you can't do. Right? And let me tell you something. In my book, and I have this white paper that I wrote to get me into PhD school because I flirted with that for a little while. And it's called Risk and Reward. Less is more, right? So I can prove mathematically and scientifically that you don't have to take greater risk for greater reward. But that's what everybody says on Wall Street because they have to say that. That's a law, believe it or not. You hear these commercials say all the time, past performance not indicative of future results, right? That's a lie, right? Now, I know it's a lie. I'm not saying that every financial advisor out there knows it's a lie. And I don't think every financial advisor out there knows that you don't have to take greater risk to get greater reward. But they just don't know any better. I do. So if I get licensed, I know better. I'd have to lie because I can't say that because that would be against the law. How stupid is that? But it's their world. It's their world, right? So I have my own method, my own philosophy. I'm anti them. I'm anti-establishment. I'm an independent free market capitalist, and there's really no party for me in America. And I just want to help people, not my corporate sponsor, let's say.
Dan, you reminded me of that movie, The Big Short. There were like a couple of movies that they made on Wall Street about the 2008 crisis, and you're right.
Great book.
They have like the most complicated words for these terms, like derivatives, third level derivatives, like all that stuff. Like it's like even I'm like my mind is like, what are they talking about? It's just like a bunch of mumbo jumbo, and then I realized they're basically creating they're creating debt, like they're selling things that doesn't exist.
Derivatives, yeah, exactly. And again, The Big Short, great book too. You take The Big Short, which, very interesting movie as well. What did those guys do that Wall Street didn't do? Because those guys fleeced the Wall Street establishment. The Wall Street, shorting. So what's shorting? Okay, I told people there's only one way to make money to buy low and sell high, right? A short sale in stock investing is the exact same thing, but in the opposite order. So you sell first high, and then you buy low second. It's just a change in the order, right? But it's still buy low, sell high. You just don't do it in that order, buy low. You sell high first, then you buy low. So what was happening with The Big Short is these guys, a group of them, the hedge fund people, they were shorting the market. And Wall Street, Goldman Sachs, was buying the market at that time. And you say, well, how did these people, they actually read what the derivatives were all about. And when they read all the paperwork, they realized it's got to collapse. This can't work, right? This cannot work. So they beat the establishment at their own game, and it's because they did more due diligence, right? They questioned the conventional way of doing it. Me too, right? No difference. But I'm questioning everything the conventional, wisdom is on investment, and they haven't even. Who can beat my argument? You can't beat my argument. So I'm right? I prove it year in and year out, right? It's impossible to win doing it their way, but they make a lot of money doing it. So why would they say anything else?
No, I mean, but when I saw that movie and I realized that they're basically making money out of things that don't exist, basically on a future derivatives, like it's just like a mind-boggling concept because it's just deeply immoral. Like basically the current financial system is it's not based on sound money. It's based on a deep level of immorality. Like they don't have the money. The banks don't have the money. Even the fractional reserve concept, they don't have the money.
Crazy fractional reserve system. No kidding. But again, they're a casino. And that's what scares a lot of people about it. When you think about it, so options, go back to the GameStop situation. That shows you, and I wrote a blog on it, right? Why the GameStop lesson is important to all of us. Because through options, they create the opportunity that you could sell more stock than is actually outstanding. They created options to the point where you can short 140% of the stock. Well, you can't sell more than 100% of anything. But because Wall Street is a casino, they did that. And that's how the whole GameStop thing happened. And again, what did you have? You had a bunch of investors that all coalesced around Reddit, right? And they said, dude, there's too many shares that are sold. So at some point, they're going to have to close off. And when they do, the price is going to go up. So we should just buy. And when they have to close those shorts up, that's when we make money. And that's what happened. And again, this is just the little guy doing more due diligence and questioning what the establishment was doing, because, the establishment hated that stock. So what do? right? You create the mechanism to really force the price down. And how do you do that? Create more opportunities to sell than there actually are. That's how corrupt the system is. But I don't play those games. And I don't recommend people play those games unless you're going to spend your life at it. And it's just not my thing, And GameStop's not a stock that I would buy, and I give people criteria in my book of why I wouldn't own a thing like stock.
Which brings me to my next question, Dan, because I want my audience to basically understand how the system works and how money works and everything. So can you tell me and the audience a little bit more about your book, Lose Your Broker, Not Your Money, and the premise of how it got started and all of that?
Yeah, and absolutely. And the book, you could find it on my book's website, loseyourbroker.com. And from there, you can find out more about me if you wanted to book an appointment with me to hear more, learn more about what I do and how I could possibly help you in your financial future. You can go to those websites. But so it's an interesting, quick story, Cosmos. Like I said, I began to get interested in the stock market October 19th, 1987. When I got to graduate school, for my graduate thesis, I got a project. You have to create a real product that can compete in the marketplace, and write a marketing and business plan to launch it to market, right? And it was important for me, and it's a long story, and I don't want to get into it because I know we're short on time. So when October 19th happened, I had three professors, an old broker who was retired teaching, an old former Federal Reserve banker, and a corporate executive that was working at Pratt Whitney in Hartford, Connecticut. And they all had three completely different views on mutual funds. The former broker thought that that's the way to go. You need the big diversification to kind of minimize your risk, stabilize your returns. The former Federal Reserve banker was like, this is a completely different world than 1929, because that's they were talking about it's just 1929 all over again. And he was like, no, this will be a blip on a radar screen. The banking system's strong, the economy is strong. It was Reagan's last year in office. They always happen at the end for some reason. And Reagan wasn't worried about it, so I wasn't worried about it. But I was worried about getting a job that May, because I was a senior in college at that time. And then the corporate executive comes skipping in. It was Monday night, actually. It was a night class, so that happened during the day, and he comes in there. And I didn't think this guy, Cosmos, could smile without his face breaking before this day. He was just so monotone, dry. He comes in and he skipped in with this giant smile on my face. It's the greatest day of your lives. Tell your parents, your grandparents, your uncles, your aunts, your friends, everybody, now's the time to buy stock. This is the greatest opportunity in your life. And he starts rattling off stock after stock after stock. And I'm like, what is going on? And he goes, and if you can only buy one stock, buy Walmart. Buy one. I mean, Walmart. I'm in Connecticut, upstate Connecticut, in the Northeast. Walmart never came north. It was Kmart up there, Sears, Bradley's, Caldors, all these other. Walmart was basically south of the Mason-Dixon line. And there was no internet back then, so like that. You didn't know Walmart unless you drove to like Bentonville, Arkansas, right? That's when you found it, right? So buy Walmart. And I have a footnote in my book. From that moment to the day my book published, Walmart was up 1,451%. So I asked that guy, how are mutual funds? And he goes, mutual funds, they suck. Mutual funds are socialized investment products. And again, what's socialism? What does that mean? And again, I wanted corporate America, corporate finance. I wanted to be a CFO. I was interested in the stock market, but it was just like hobby then and hobby now, but now I want to make it my life. So I leave there. So now I'm in graduate school and I got this project and I got to create a product. Well, if those three guys, one thought they were good, one thought they could be useful, one thought that they stunk, what's the answer there? So I go out and say, so if they do stink, there's room for a better one. And how am I going to compete with the Wall Street establishment? Well, it's got to be lean. It's got to be easy, because it's got to be cheap to manage, right? So I can make money at a lower price. So I'm saying to myself, okay, if I could create the perfect mutual fund, right? And the name of the plan was Super Funds, America's first micro mutual fund. That was it, right? If I could make it better, right? then I'm onto something, because then I could say it's better, it's cheaper, and why would you own theirs, right?
Mm-hmm.
So back then, it took me a long time to find out that there was only 30 stocks in a Dow Jones Industrial Average, and it was, I think at that time, 509 stocks in the S&P 500. So I said, well, forget about the S&P 500. It's impossible to figure out. But if the Dow is only 30, I'll own a smaller number, and I'll own better companies, right? My mutual fund. It'll be just as easy to calculate, blah, blah, blah. And so that's what it was. So that's what I did. I created this plan, and it was micro, and back then it was 525, my method, but now it's 1551. And I figured out that, if you're smaller and better diversified and better structured, you can outperform them long-term, short-term, whatever. Up markets, down markets, crisis markets, expansion markets, right? So why would anyone do this? So I handed in, I never so certain of an A in my life. And the teacher was an Eastern European guy who did this all over the world, spoke in broken English, and I needed the A in this project and everything else. And he said to me, he goes, Mr. Calandro, let me just tell you something. This is the greatest business plan I've seen in my life, and I've seen them from all over the world. It's smart. It's this. The product works. The methods. He goes, it's so smart. It's stupid. It's so smart. Blah, 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 blah. And then he goes, there's only one problem. One problem. What's the problem? Because it's too simple. It's too easy to do, because once you go to prospectus, you got to lay out what you do in your philosophy and strategy. And people are going to read the prospectus and say, I don't need him. I don't need to pay him to do it. I'll do it myself.
Wow.
Also, as great as it is, it really deserves an F, because there's no business here, and this is business school. Great idea, but it's not idea school.
Wow.
But you know what? It's just so good that I got to give you an A for effort. And of course, I was pissed about that. I wanted the real A. I don't want the A for effort stuff, right? So as I was walking out of his office, he said to me, hey, Mr. Calandro, well, you should write a book. It's a great book. Did you make money off a book? It's a great book. And so I wrote the book, and I think there's a business around it that I'm going to launch, finally, that I got done with my CFO career, helping people, coaching people, help them build their perfect portfolio, helping them understand what's happening today, what's happening tomorrow. When it happens, where can they go to actually get some real, legitimate, unbiased, opinion, advice, and coaching without, being connected to that, establishment finance. Which I'm just down on, but that's how it all began. And that's, like I say to people, it's, I wrote that book, and when I was writing that book, I was predicting the '08 crisis, the crash. I thought it was going to be like the tech boom crash or bust, whatever you want to call it. But once I got to the end of the book, it happened. So now I had to cut out all the prediction stuff and just, talk about it as a historical moment. And I did that. Took me another year or two to cut it down from 180,000 words to 50,000. And it's a short, tight book. I call it the Of Mice and Men of Investment, because it's around the same number of words of Mice and Men. It has a lot of charts and pictures and everything. And it works. It can't not work. It's mathematically right on, and it's not complicated math. It's multiplying, adding, and dividing. It's subtracting.
I would definitely recommend my audience to certainly buy your book, because I think it is absolutely relevant to the current time that we're in. Because like the crisis is coming, and we need as many people as possible to be informed. But Dan, is there any other projects that you're doing that you would want the audience to get a glimpse into?
Yeah, I'm putting together an online course right now, because a lot of people, feel the need to be coached through it. So I'm doing an online course, and it's all updated. The book is all updated. The portfolio has changed since the book came out, so that update will be there. And then I'm building a support platform, where people could go and ask questions, where people could go and set up meetings. People could join my podcast, which someday I'll start once this course is up and running, and study groups and support groups and anything that they would need to successfully manage their own, Navy SEAL team, I say, their own small group of of winning stocks. We'll do stock selection seminars as well. So that's coming. But like I said, you could always get started by going to the book's website, connecting with me on LinkedIn or through email, because
Which brought me to the next question. Like, how can the audience connect with you and get to know more about you and your work and your book and all of that?
Yeah, if they go to the About Dan tab at loseyourbroker.com, if they go to About Dan, they could learn more about me. They can book an appointment. In both of those websites, that's my business website. Both of those websites will give you access to email me and open up a dialogue, and then we can have a short little 15, 20-minute, get to know each other and how I could help you session. But yeah, that's the easiest way. And I am on LinkedIn, so they could search my name on LinkedIn and connect with me there and message me there. I do that stuff. I don't outsource that to anybody. So yeah, that's the easiest, best way.
Dan, I'm so grateful that you took the time to come on this podcast and share your wisdom about all of this with me and the audience, because this is something that is so important that I want everybody to know. And I would definitely want you to come to this podcast at a later time and share your wisdom once again,
Anytime, Cosmos, and there's a big event coming. So, anytime, you have how to connect with me. Just reach out. No problem. Anytime.
Thank you, Dan. I appreciate it. And I want to conclude this episode by letting my fellow extraordinary Americans know that, hey, look, there's an extraordinary within each and every one of us. It's our duty to awaken it and unleash it. Until next time, bye for now. Hey everyone, thank you for watching Extraordinary America. If you like what you see, please do subscribe to our podcast and share it with others. Remember that the best investment that you can make in your lifetime is in your own financial education, for it is knowledge that truly sets us free. Also remember that inflation is diluting your purchasing power, which in turn increases financial bondage. The practical thing to do is to protect the loss of your purchasing power and invest in precious metals or the right cryptocurrencies. Lastly, never forget that you are an extraordinary American. We'll see you in the next episode. Bye for now.